Bitmine is dropping and I just bought more $6,000 worth of Bitmine stock options. This is essentially the exact place in the next couple of days and weeks where you can buy a very cheap company that can have a 10x result. So if you want to dive in with me into what Tom Lee says, what Bitmine is doing behind the scenes, and what I think will happen towards the end of the year, then stay tuned and let's dive in.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video. If you don't know who I am, my name is Danny and I'm looking for stocks that can go up 10, 20, 30, 40, 50x. And I did this many times before with Palantir, Nvidia, Robinhood, and most importantly, Tesla here on this channel. I've updated on daily basis like I do for Bitmine investors right now. Okay, and my subscribers bought even houses and apartments. So you should be subscribed and also be on my X account. Now, also remember that I never advertise any broker out there. I never advertise any crypto project. Even I get ridiculously offered amounts like $20,000, $30,000 for a single video. But this is not the way that I want to introduce something to my audience. The only thing that I introduce to my audience is my own product that we worked over 4 years, close to 4 years now, where we developed our own software that automatically day trades for you. But it's not like a bot or a script. It's real day traders. I have a team of 4 day traders that work the whole day in front of the market for you. We had 3 trades this week, all positive, 100% win rates. So we are up on a very down week. And if you want to have that as well for your personal portfolio, all done for you, and schedule a call with me personally and we see if we can help you as well. You need $10,000 or more to get started. And now let's dive into Bitmine. What a horror show. I mean, if you're looking into the charts of everything, right? So Ethereum in 1 week lost about 11 or 12%, right? And it's not about Ethereum or crypto. I mean, the whole market, right, is kind of from the highs of the 11th November, we lost another 2.5%. If you're looking into the months and take the highs of end of October, we are down about like 4.2%. We were already down like 5.2%. There could be still some, let's say, volatility and some kind of weakness, but there's no reason for that, right? So the only reason is really if you zoom out and say like, okay, now I understand why, okay? We had a rally over 6 months that we just went higher and higher and higher. Obviously, at some point, we go a little bit lower and we correct. A correction is totally normal of 10% in the market. And that means that crypto loses about like 20, 30, 40% because it's the most risk on and volatile asset compared to stock market. But then you have also Bitmine that is connected to those crypto markets and takes up this volatility. And that's why if you are looking into Bitmine, you see that Bitmine obviously lost a lot from the recent highs as well, right? So the recent highs here about like 63 was we are down about like 39%. A nice discount if you love and you like Bitmine at 63. Why you don't love it here at 636? Okay, quite interesting. Okay, from 63 to 36. Okay, so now I wanted to show you some. Okay, every dip that we had so far, okay, here for example 7th or beginning of July till beginning of August, so about like 1 month we lost about 75%. Then another drop that we had right here was mid of August till September, okay, half a month. Then we had another drop here about like 17%. That was a month. Okay, now we are going down since about like 1.5 months. So I think we could be close to something more stable in the price of Bitmine. Okay, I think that's why also I personally buy $6,000 worth of my favorite call option that, 47 strike mid of January. My average price goes lower and lower. I would love to have an average price of 5 or 4 or 3. And then, there's like, I just chatted with ChatGPT. There's like a 78% chance that we reach that strike over the period of the next 2 months. Okay. But also obviously to make profit, you need to go higher than that. Okay, so if you have like a price of, let's say, 5, you need to have like a $52 on Bitmine. And I think that this can happen. Obviously, there's a lot of value through the time left in the option, but that's what I'm doing beside buying also more shares. Okay, so I'm using this dip obviously, and I think that it would be absolutely phenomenal when we reach like 34s, 33s, 30 even. I will make a whole technical video in my second channel today. Okay, so make sure to check that out. Now, with that said, I want to also emphasize that Tom Lee kind of told us, okay, again, the GOAT of Wall Street said something that is very important, which is he believes that and he considers the 6 months of increase, he said that the first half of November could be quite choppy. And here's the clip where he explains why. And as usual, perfectly backed by fantastic data.
I'd say that we still think November is going to be an up month. I mean, with a lot of confidence. And the first reason for that is that stocks are up 6 months in a row, and it's almost going to strengthen the case for November to be positive. But we know it's going to be choppy. We think it's a choppy first 2 weeks, but then we ultimately end up, over 200 points on the S&P. That would take us past 7,000. And these are the 6 years that I think are precedent markets. These are the times where the markets were up May through October. And you can see that the November to December, which is far on the far right, has been positive, except in 1936 when the markets basically were flat. But, I think we're in a very different place. That was post depression period. We're really in the middle of an upcycle. And, I still think we're going to be at least 7,000 by year end, maybe 7,300. And if you think what's late cycle, just keep in mind that ISM is still below 50, 33 months now. We've never been top of the market when the ISM is below 50. And keep in mind, housing is still undersupplied. We have built only 13.6 million homes in the past 10 years versus 15 million household formations. That's a shortage. That's the opposite of the GFC, when you had basically 7.5 million excess homes. And for those who think valuations are extended, keep in mind NVIDIA is trading at only 29 times forward earnings. Costco's at 42.6 and Walmart's 35 times. It's still cheaper to buy NVIDIA than to buy a GDP grower. And in 1998, Cisco was already at 56 times forward earnings before getting to 210 times. So I think we're far from a bubble.
So before we talking about that, make sure to check out extenddaytrading.com and schedule a call with me, and we see if we can help you as well. Now, as you have seen in the clip of Tom Lee, he takes the data of the last times that happened, okay? It happened already. Whatever happens on the stock market, it almost always happened before. So he gets all the data points and say like, wait a minute, the last time that happens, November was actually a positive month, right? In almost 80% of the cases. So why it should not be this time again? There's a high probability that it does, right? And then you can see, okay, why the market is so volatile. And we have seen it's not only Bitmine, but it's crypto, it's the stock market. Why it's so that everything is selling off? Because of the rally, okay? There's no other catalyst so far. Maybe you can say, okay, the market yesterday expected that we see the CPI numbers and they were not published, right? Because of the first day of the government shutdown, coming to an end and so on. But you see here that the most important is that you are very much focused on what the data is saying. And the data is saying that actually, the market should go up not only in November, but also in December, which is our strongest month, okay? Well, one of our strongest months on the stock market, okay? Now, I want to also, I think this is just fitting perfectly. Some people, especially when they are are, kind of new to the market, they try to diversify, okay? They buy like 20, 30, 40 stocks. And obviously, if you don't know what you're doing on the market, then this is obviously the best choice. And even better, just put your money into an S&P 500. But also remember that once you want to go really deep into high quality companies, it may be sometimes you just go for 1 or 2 or 3 companies in your portfolio. And I think that some people of you are doing that and have maybe the biggest or only Bitmine in their portfolio. And this can be obviously quite, let's say, demotivating when the stock goes down. And I made like this one tweet yesterday, which I would love to go through with you, which is the following. If you are worried about latest Bitmine minus 42 drop since 6th of October, remember also Tesla went from 23 to 12, Palantir went from 35 to 8, Hood went from 55 to 8, and Nvidia went from 31 to 11. They are all triple digits now. Most probably you missed them all. Don't add another one, okay? And I leave it here because I think that it's so amazing that whenever the stock or your favorite stock is actually, in the downfall, all the negativity comes out and people come out, they don't want to believe in it anymore. But if it goes up, then everything is fine. But if you are an investor into that, then you need to go through all the phases of a company and also on a company stock, which is totally different sometimes than the company itself. Because, for example, they also now they got a new kind of CEO for the new era of this company. They got a new board member, so they are working on their end of company to really make sure that they going into the next level. So they are working, and you should too. And I leave you with a clip of Warren Buffett that says a little bit more about diversification in your stock portfolio. I see you tomorrow, and remember to check out xnatrading.com, and the grass is greener always on the other side.
The question is about diversification, and I've got a dual answer to that. If you are not a professional investor, if your goal is not to manage money in such a way as to get a significantly better return than the world, then I believe in extreme diversification. I mean, so I believe 98 or 99%, maybe more than 99% of people who invest should extensively diversify and not trade. So that leads them to an index fund type of decision with very low costs, because all they're going to do is own a part of America, and they made a decision that owning part of America is worthwhile. I don't quarrel with that at all. That is the way they should approach it, unless they want to bring an intensity to the game to make a decision and start evaluating businesses. But once you're in the business of evaluating businesses, and you decide that you're going to bring the effort and intensity and time involved to get that job done, then I think that diversification is a terrible mistake, and to any degree. And I got asked that question when I was at SunTrust the other day. And if you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, that is all the diversification you need, and you're going to make a lot of money. And I will guarantee you that going into a 7th one is going to, rather than putting more money in your first one, it's got to be a terrible mistake. Very few people have gotten rich on their 7th best idea, but a lot of people have gotten rich on their best idea.
Omission is way bigger than commission. There's big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come. Because you're not going to get 500 great opportunities. You would be better off if when you got out of school here, you got a punch card with 20 punches on it. And every financial decision you made, you used up a punch. You'd get very rich because you'd think through very hard each one. I mean, you went to a cocktail party and somebody talked about a company, you didn't even understand what they did or couldn't pronounce the name, but they made some money last week and another one like it. You wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, particularly during bull markets. In stocks, it's so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one the rest of your life, you would think a long time before every investment decision. And you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to. Yep.